here, but give us any updates, any newsworthy stuff on the big island that's kind of happening that you want to share. Anything about the market? Go ahead, Dylan.
Yeah, it's definitely changing. There's definitely a shift going on. I don't know if it's cooling or what's going on, but there's more homes on the market than there has been in a very, very long time. There's 522 homes on the market on the Big Island. We haven't been above 500 in a while, and we crept up to 1,657 active listings. So that number has been like under 1,600 for a really long time, and got all the way down to 1,300 at one point. So things are shifting. We're still seeing very aggressive pricing on seller behalfs, and buyers are becoming more cautious with the higher interest rates. Their buying power has gone down. So it's some interesting stuff going on in the market. But for the most part, still strong. I mean, it's going to be a very, very long time until we get back to normal levels of inventory, like 3,000 properties on the market. We're still like 50% where it normally is. So, going forward, we'll see. But I'm not seeing any type of dramatic downward shift. It's more of a cooling off is probably the best way to put it, a plateau potentially. So
yeah, that's the sense I got from at least the articles where it's cooling off. The curve is starting to kind of bend a little bit. It's not quite so steep. Heidi, what's anything else, Dylan, that you want to share? A Big Island news? Anything?
That's the short story.
Good, thank you.
Yep.
Heidi, what's going on in Maui? Give us the update. Give us some interesting news. Give us whatever you want to share.
Sure. Well, real estate wise, I mean, the market is definitely shifting a little bit, shifting towards a more balanced market, which is actually a good thing. And it's good for buyers. It's still a very robust market, but the rate of appreciation has slowed down. The kind of real intense frenzy has slowed down a little bit. But I mean, it's still very strong. Like the big difference between this year and last year at this time is the number of properties closing is a lot less. The number of properties going under contract is a lot less. But I mean, overall, I think it's going to be a good thing. I mean, we're seeing more price reductions if sellers have overshot their prices, but we're not really seeing any signs of prices going down. And the amount of properties on the market is still very, very low. I mean, compared to any historic levels. So anyway, that's where we are right now.
So same kind of thing on your end. Yeah. Thanks, Heidi. Scott, what's going on? What's up? What's going on with Oahu? What's going on with you? What's going on with the market?
Yeah. I mean, this is a time where I start to take a long look and a deep look at a lot of different areas because the market is shifting a little bit. And what does that mean and what's coming down the pipe? The funny thing is Oahu just had this month we had record price appreciation or record prices for single family home and condos. So the market's still going up. Don't think that it's coming down. But we are starting to moderate. I got a new word for you today. Instead of decelerate, which is still a good word, moderate is what we're starting to do on the single family home side, not on the condo side. So we've had 4 months of fewer sales than last year. Fewer sales by how much? 5%. It's not earth shattering by any means. The months of inventory remaining is slightly moved up. So Dylan mentioned 500 and something active homes on the Big Island. Well, we've got 527 where we were at like 400 a couple of months ago. So we're nowhere near to being able to give buyers any kind of advantage, where it's still a seller's market and it's going to continue to be, but we're going to start to decelerate. And one of the things that's really important for people to understand is we can look at market stats and you can start to see the rate of price appreciation slowing down. But there's a hidden cost that people don't see, that don't show up in the market stats, and that's what interest rates are doing. And I mentioned it last time, we're in an inflationary period. So as interest rates go up, you don't see it on the market stats. Where you will see it is its effect in that appreciation rate. It will start to sit on that, so it'll start to decelerate that the rate of appreciation. But we've also been appreciating at 20% per year, which is not sustainable. So yeah, we're going to start to normalize, but it may take 2 years. I expect us to have double-digit price appreciation in single-family homes this year. Next year, single-digit price appreciation. So by no means are we going in the opposite direction. And if interest rates keep going, it's going to cost the consumer more. The interesting thing is the condo side. we're up 13% in price on condos now. We're up 13% in number of sales. So that shift, like I was talking about, is moving to the condo side. And there's 30% less listings available for condos now than there were a year ago. So the shift is happening in that direction, and it's gonna condos are gonna still be hot here. So that's kind of the summary here. Deceleration on the home front. We've had a hell of a run, and it's going to shift now to the more affordable condo option.
Interesting. So yeah, what I'm hearing you say is that a couple things is what you moderate. It's an interesting word here. It's moderating the market, and so it's not as sky high as it is, but that because of interest rates, etc., is that it's going to shift to buying is going to be the activity is going to shift into the condo market because that's kind of where the lower prices are. So it's going to be a very interesting kind of things to see how that all flies. Thanks. Great observation.